airline industry's outlook has deteriorated sharply. IATA has almost halved its 2026 profit forecast to $23 billion, citing a $100 billion increase in fuel costs linked to the conflict in the Middle East. While revenues are still expected to reach record levels, rising costs are squeezing margins across the sector. Fitch Ratings has also downgraded its outlook for global airlines from stable to deteriorating, warning that higher fuel prices could weaken profitability and eventually impact passenger demand. The uncertainty is beginning to affect fleet planning. Embraer Chief Executive Francisco Gomez Neto said some airlines are delaying decisions on aircraft purchase options as they assess the impact of higher fuel prices and geopolitical tensions. However, the manufacturer says its order pipeline remains strong and it continues to target increased production over the next 2 years. Air France-KLM Chief Executive Ben Smith has indicated the group would be willing to discuss a transaction involving easyJet if approached by Castlelake, which is currently evaluating a possible bid for the UK carrier. The comments add further intrigue as investors await Castlelake's next move ahead of a June deadline under UK takeover rules. US carrier Breeze Airways is targeting an initial public offering in 2027. Founder David Neeleman said the airline does not currently need to raise capital and can afford to wait for more favorable market conditions while continuing its expansion across the Americas. And finally, Airbus delivery delays are affecting IndiGo's plans to expand its long-haul network. According to reports, the Indian airline is unlikely to receive all 9 A321XLR aircraft scheduled for delivery this year, as supply chain disruption linked to the Middle East conflict continues to impact production schedules.